Good afternoon, good morning, good evening, everyone. It is 12 p.m. Eastern Standard Time on this 24th day of February 2021. I'm going to spend today on, I'll make it a little shorter today, on the Aussie dollar. I entered in a couple short entries at the market at 83.89 and again at like 84.04 or so. And then I have some sell limit orders sitting up a little bit higher at 85.12 and then again at 86.12. The reason I am kind of tearing these in is because we could see it rise all the way up to 87. However, given the current, I don't have this on here, but there's a foldback pattern. The foldback pattern is indicating that we should see a pretty good retracement, and more than likely well, actually, let's just look at where it may go. So first off, these lines here, they look kind of funky and wavy. This is every 60 degrees of the excuse me, of the asteroid. I know this is going to sound odd for those of you unfamiliar with financial astronomy, but this is the longitudinal coordinate of the major asteroid Chiron. And so this is every 60 degrees, these red lines, that's what they represent. But for whatever reason, the longitudinal position of that asteroid is a very powerful support and resistance level for the Aussie yen. The chart we're looking at here goes back all the way to 1990, and so it's a pretty good amount of data showing that the strength of that support zone. Now, we are kind of in the mid of these two levels, but there are some other things that are inside here that make me cautious about any further upside potential as far as beyond at least this extreme up here at 87 even. Hide that, pop up with our Fibonacci confluent zones. It's very rare to pierce through an entire series of confluent zones without any retest lower. So if we do have a bullish outlook that it'll resume, more than likely the first kind of pullback we're going to see is from 84.04 down to 82.74, or more likely we test back below at 79. So we're looking at roughly a 500 pip drop, probably not starting till the beginning of next month actually, so next week, because these things tend to run pretty much from one end of the month to the other. And then we look at some more geometry here, and we have a couple zones here. So let me just actually hide the confluent zone. So this is a form of geometry and technical analysis known as Euclidean geometry. And so there's several ways to plot these out, but real quick, when it's all put together, because you plot them off of circles here, and let me get the chart squared. There we go. And so this is what a Euclidean chart will look like. And we're coming right up against this near-term pressure at 84.50, which is also intercepting this primary uptrend angle. So there's a ton of near-term resistance really right where we're at, and 50 pips above. That's why I've got some stops sitting up there. And then as we go on, like the mid of this angle here is very close to the top of where Chiron is at over here. So but looking at how the foldback pattern plays out, I mean, we do see very much a likely scenario that we face a pretty deep retracement. I'd be surprised if we drop down to 79. I mean, I would really expect us to test 80 even again. as a level. But even if we adjust our foldback just a little bit, actually not a little bit, but let's bring it back to where are we at? Right here. So we can see that the swing structure, the green line, is the fullback pattern, which all it's doing is basically doing a kind of a mirror image of the past price action. So you're seeing like these peaks over here are what we see represented here, and fullback patterns are really nothing more than they're just a naturally occurring event where we see price repeat the same swing structure. And we typically do see it do that. I mean, that is a very, very common thing. I mean, that's one of the reasons why head and shoulders patterns are so effective. We just see the same swing structure repeated. I mean, you can place it anywhere where you see there's a lot of symmetry. I mean, the market is very symmetrical, especially when you talk about range-bound markets like foreign currencies. But you know, we can just see how effective these kinds of moves are. So it's, you know, it's not a surprise that, you know, you look at this chart, and actually let me just hide all that there, and you know, you see very similar, almost equal moves here across the board. So what is the likely scenario now? Well, that's why it's good to build fullbacks off of head and shoulders patterns that exist, or any W&M pattern. Currently, we see that we are due for a swing move lower. And now, some people may ask, well, it doesn't follow it all the time, does it? I mean, let's go back over here. You know, we see, okay, well, this says that there's 3 peaks up, but then down here we see 3 peaks down. That's called a mirrored foldback. And so what we see occur is the opposite of this. The swing structure still exists. We're just doing the inverse of it, which is fine. But these kinds of things really do give us a lot of opportunity to look at how things are going to move. So if we do anticipate the Aussie dollar continuing to move higher, no matter how we look at it, if we were looking at the foldback where we started, there's string structure indicating lower, and if things are going to move in an inverse action still, then we look at an inverse move to the next swing structure right here, which is actually a move further south. And that really does kind of lead us to look at that scenario playing out. So anyways, that is it for me. We'll just kind of touch on the Aussie dollar, US dollar. Sorry, this is the Aussie yen, because it's been the major yen performer. It's been the best performer so far, and it's the one that we should see lead the correction as well. And I'm looking forward to that. So anyways, y'all have a good rest of your trade day. Take care of yourselves, and I will speak with you all tomorrow.